our amazing guest speaker. She is joining us from the Houston, Texas area. She has over 40 years of experience in as a payroll accountant in various situations. She has a banking background. She's a payroll accountant, and she is just she loves what she does, right? And she loves to help and she loves to answer questions. Additionally, she currently works at a major hospital in Houston, Texas, and she basically presents this information to new employees of that hospital so that they can maximize their check. I've had the privilege of knowing this person my whole life. So without further ado, I introduce you to my amazing mother, Gwen Bradford. Take it away.
Okay. Well, hello everyone, and welcome. Um, we're going to be talking today about something that is so very important and crucial to everyone who has to prepare a 1040 form, okay, and works for an employer. And every employee has to complete this form so that the employer can determine the amount of taxes, federal withholding tax, to be deducted from that employee's pay. So we're going to talk about the W-4 form, okay? Now, the W-4 form has 5 different sections to it that has to be completed. Um, well, I'll put it like this. Some steps could be alleviated. It depends on your marital status or your number of dependents. So the first section that you would have to complete would be the top portion, which includes your personal information. Okay. And then that is your name, your address, your social security number, and it's very, very crucial that you put the correct social security number on your W-4 form. Or if you're entering it in a system that you put that correct information in your system. Okay, you can go to the next slide. All right, the information on your W-4 form impacts your pay tremendously. So, what you need to do is make sure that you choose the correct filing status. Okay, they're single or married, filing separately. That particular status will allow a higher withholding rate to be calculated for your federal withholding tax. And the next one is married, filing jointly. That particular status has a lower tax rate. And you think in terms of you're going to be filing your 940 form with your spouse. And then the last marital status would be head of household. And that's for individuals who, say, single parents who have children that they're taking care of. And that rate would be even lower than the single status. Now, let me make this point clear to everyone because a lot of times employees would say that, okay, I have to I have to enter married as my status on my W-4, but that is not correct, even if you are married, because some married individuals prefer to have even more taxes withheld from their pay so they can choose the marital, well, the status of single, and that status will allow more withholding tax to come out of their pay. Okay, now, next slide, please, Mia.
Mhm.
Okay, now this is, they're calling it the secret weapon. But hey, if you've never gone into the IRS website, www.irs.gov, and in the search bar, put in tax estimator, and actually looked at this weapon, so they call it secret weapon. Hey, you really don't know what you're missing, because that particular um, weapon has a lot of good information for you to enter, so that you can know exactly what you should put on your W-4. Now, this particular estimator, what you have to do when you want to use this tool, you would have to have your latest paycheck statement, and you can have like determine what your annual income is. Also, you can have a copy of your prior year's tax return, because when you use this estimator, it's going to ask you different personal questions that only you would be able to answer. So you have to be prepared to answer all of these questions, and the end result will be based on the information that you put into this estimator. So you're going to have to like put in your filing status, your age, your dependents, the number of jobs you work, the income from each position, your tax that have been withheld thus far, and then the tax credit information, your deduction information, and other income that you may have. So you have to know this information in order to answer the question, so that you can get a true answer at the end as to what you should put on your W-4. Okay, so let's move to the next slide, please. Oh, and by the way, I love the tax estimator. In fact, periodically throughout the year, I go in just to make sure I'm, on the right path to not having to owe Uncle Sam a lot of money. But I'm going to backtrack just for a minute. The IRS changed the format and information required on the W-4 January of 2020. Okay. And if you look at the new format and information that's requested on the W-4, you'll see that it's like almost like completing a 1040 form, because basically the information that it's asking you, and we're going to go through those steps in certain steps like 2, 3, 4, that's information that's going to go on your 1040 form. And then the reason why they changed the form is because the government didn't want to have to owe people a lot of money at the end of the year or when they file their taxes. And they didn't want people to have to owe them a lot of money, because if you owe them, there is a chance that you could be penalized based on the amount that you would owe them. And if you have too much money taken out of your pay, and a lot of people rejoice because they're like, oh, I'm going to get refund, but it's like you're giving the IRS an interest-free loan, and they have more money than I have. So I choose to make sure that I'm right on track by periodically using this tax estimator to see where I stand at a certain part of the year. Okay, so let's move on. So like I said, the first section is where you put your personal information, your address, your marital status. Now the next step is step 2, where you have multiple jobs or your spouse works. In this particular section, you want to make sure that you're being taxed accordingly, so you don't owe a lot of money. Is that it's best, if you choose to answer this, to use this step, that you determine who has the highest salary out of you and your spouse, because there's different ways you can determine how much more that you need to pay in federal withholding tax throughout the year, rather than wait until the end of the year and then you owe Uncle Sam a lot of money. Now, if you go to step 2, there from the W2, I'm sorry, W4 form is on page 3. There's a worksheet that you can use, and you should have that in your handout if you go to page 3, where it says multiple jobs worksheet. And then all you need to do is read the information that they're requesting, and fill out the appropriate number with the information that it gives you. Now, that's in this sense, I find that the tax estimator, is a really good tool, because in that case you may not have to go to this worksheet. But I'm not telling you not to do it, but you may want to use that estimator, because you're going to have all your information when you answer those questions in the estimator. So, or like I said, you can go to the page 3 and fill out the information that they're requesting, and then what it's going to do is tell you where and what information needs to go on each line of your W4. Now, the next step is step 3, which this is where you would claim your credits. And that, like I mentioned before, on the 1040 form, credits, you would indicate credits so that can reduce your tax liability. But now they have it here on the W4, where you can actually put that information on there, so that the appropriate amount of taxes will be deducted from your pay. Now, if you have a spouse, and you and your spouse complete your tax return jointly, what you do is consider who makes the highest amount of money. And the one who makes the highest amount of money would be the one who would take advantage of the credits on the W4 in step 3. Now, if you make less than your spouse, then you really don't need to complete step 3. It's best that your spouse does, okay? But you would still complete step 2, because you have two incomes coming in. So that's important. If with multiple incomes coming in, step 2, both husband and wife would complete. Step 3, with husband and wife, only the one who has the highest salary will complete that section and take the credits. Okay. Then the last step, which is optional, is step 4. Now, what you would complete on step 4 is any other income that you would receive would be a part of that entry. So what you're going to do is you're going to add like your interest and dividend income, any retirement, any capital gains, money you receive from your rental property, and any money you receive from a side business profit. Now you want to use annual amounts, okay? And then what you're going to do is you're going to enter that information, and you're going to determine how much in additional taxes should come out of your pay. Now, the deductions are going to be taken into consideration to reduce your taxable liability. Any, I'm sorry, let me back up. Step 4A, other income, like I said, interest or retirement or capital gains, that amount will be put in line 4A. So say, for example, you're receiving a total for an annual amount, and it most likely will be estimated, because you don't know, like at this point, until the end of the year, the total interest and dividend income. But what you're going to do is estimate and put the amount on that line, okay? And then when you go to step 4 B, which is your deductions, okay, what you're going to do is you're going to add up whatever deductions that needs to be put, like mortgage interest, state and local taxes, charitable contribution, student loans. Now, some of these items they cap at a certain amount. Like some state and local tax, they cap at 10,000. But you want to put the annual amount for the year on line 4B. And then uh, step 4C is extra withholdings. Okay, what happens with the extra withholdings, the amount that you have for step 2, which is your a combination of both incomes, when you if you decide to use the worksheet, you will come up with amount that it's gonna okay, let me back up a minute. I'm sorry, you guys. All right, if you go to your handout and you look on line 4, okay, and there's 2 jobs. You have husband and wife. What you want to do is on the left hand side, you'll see higher paying job, annual taxable wages. So say for example, the person in your family, your husband, say makes 100,000. So you're going to pinpoint that amount. Then say, for example, you as the lower paying, has the lower paying job, makes 60,000. So you go and you have to get the intersection of the one with the highest paying job and the lowest paying job. And if you're able to look at the worksheet, that amount came up to be $10,930. Okay. So you're going to put that amount on line 1 for step 2 on the worksheet. Then what you do is determine how many pay periods are in a year. So if you have a bi-weekly payroll, that's 26 pay periods in a year. So you're going to divide the 10,930 by 26 pay periods, and the amount came up to $420.38. So that would be the amount of extra withholdings that you're going to put on step 4C. So when your payroll is calculated, not only will the system base it on your marital status, your taxable income, and your credits, it's going to add whatever the tax from the tax table is to the 400 and I'm sorry, the 400 and I'm sorry here. $428. I'm sorry, $420.38. It's going to add that together to deduct your federal withholding tax for that pay period and throughout the year, unless you make a change to whatever extra amount that you want to come out of your pay. And then the last section is step 5, and that's where you're going to sign your name and you're going to date it. Now, our system, it's all done electronically. So whatever date it is that you actually go in and change your W-4 information, that's going to be the date of that W-4. Now, let me just, and then I'm going to take questions, but let me just make this clear, because some people get confused with a W-4 and a W-2. A W-4 is what you tell uh, your employer, uh, what status and how much extra you want to come out of your paycheck every time you get paid. A W-2 is what your employer gives you to tell you what your taxable income, the amount of your withholding tax, and your FICA tax, and so that one, the W-2 comes from your employer. So because some people get confused. Now, what I another point that I want to make is, if you should get a bonus from your employer, bonuses, and most systems are set up this way, but any bonus, or like, let me give you a breakdown of, um, okay, so these are considered like supplemental income, and supplemental income is taxed at 22%. Your system will not look at your W-4 to determine the taxes for a bonus, commission, overtime pay, severance pay awards, things of that nature, are taxed at 22%. Okay. Now, I know a lot of times people want to know, what can I do to make sure that I pay less taxes, or less taxes come out of my pay? You can sign up for the 401k or 403b if your employer offers that. That will reduce your taxable income before taxes are calculated, before federal taxes are calculated. A cafeteria plan through your employer, such as your medical, dental, vision, uh, those things can be deducted from your wages before federal taxes are calculated. Also, if you sign up for a flexible spending plan, which is really good, because if you go to the doctor, dentist, get medicine, a flexible spending plan would be good, because what happens every pay period, whatever you sign up for, um, you can have a certain amount come out each pay period from your pay, and that reduces your taxable income. There's also uh, the FSA, which is the flexible spending accounts for that child care, where you can have a certain amount come out. So those are the things that can reduce your withholding tax. Now, there's another thing that I wanted to mention too, is that a lot of employees don't understand, like, they have what is called FICA tax coming out of your pay. FICA tax is a mandatory tax that the government set up, and that is your for your Social Security, which is 6.2%, and Medicare, which is 1.45%. There is a max on Social Security, but there is not a max on Medicare. Um, so there are common mistakes that people make on their W-4, and which I mentioned in regards to multiple jobs. So what you want to do is make sure, if you have a spouse, that you take advantage of step 2 by determining from who makes the most to who makes the less. Go to that intersection on page 4 of the handout and see that what that amount is. Take that amount and divide it by the number of pay periods in the year to come up with whatever amount that you need to put on line 4C on your W-2. Now, also, if you're getting Social Security as well as working a job, um, if you go to the tax estimator, it's going to even ask you about Social Security and how much you get throughout the year. So that's why I really like the tax estimator on the IRS website, because it really, really breaks everything down, and you're feeding the information into it. You're telling it, this is how much money I make on my job. This is how much I've paid in taxes just for this year. It's even going to ask you, do you anticipate getting a bonus? And some people know they're getting a bonus and how much it might be. It's going to ask you that. It's going to ask you if you're going to itemize your deductions. Now, Another reason why the IRS changed the W-4 form, and like I mentioned, it's kind of like you're almost filling out a 1040 form, because the standard deduction, they upped it a lot from past years. And more often than not, unless you have a lot of write-offs or deductions that you're going to put on a Schedule A, most people will use the standard deduction because it's higher than whatever they could possibly write off. They may not have enough. It may fall under whatever the standard deduction is for married or for single or for head of household, because those amounts are different. So um, they changed it so that people or employees can be more in line to like use basically the standard deductions, because they up them. And also it's very important on the W-4 that you will make any adjustments to it if you have a life changing event. If you have a baby, you may want to, that's the credit. You can get the child care credit, which is $2,000 per child that is under 17. And also, the credit could be if you have, say, an older kid that's 17 or older, you're taking care of that kid. It has to be your dependent. You can take a $500 credit on your W-4 for that. So, you know, and even if they you should update your W-4 if you have you got married, or because now you're going to have two incomes, or you're divorced, now you're going to maybe have just one income, so you can change your W-4 because of those type of events. um, Also, for claiming too many dependents, okay, they changed it because a lot of times on the old form you would have allowances, and you could have zero allowances up to well, 99, because anybody that had over 99, we had to send their W-4 to the IRS. So they stopped all of that, and then they now have the estimator tool, which is, like I said, I love it. I stand by it 100%. So it's so important to make sure that you update your W-4 when there are certain life events that happen. So anyway, that's it. That's all I have. Any questions?
Well, let's give my awesome mama a round of applause. Great job, mom. I know this was new. This is her first Zoom appearance, y'all. So she did a great job. So we have questions in the chat, mom. So I always like to ask permission, y'all. I know we are at time, but if you have a few minutes to stay behind, we can answer questions for you. So I have two questions in the chat already, and then if you have any other questions, just do the raise your hand feature or pop it in the chat. So the first question we have is, should I file for head of household if my mom and brother live with me and I pay most of the bills? They both have jobs.
Um, are you, what am I trying to say? Um, they both have jobs. How, or is it more than 50%? Like your child, well, the child, are you basically taking more than half percent, taking care of that person?
They're both adults and they each have their own income. They both contribute a portion to rent, but that's it. All the other bills and everything is taken care of. But they have
What do
their
they?
own income, so they, their own bills that they personal bills they have, they pay for that.
Okay, but do they file 1040 forms?
Hmm. Yes.
No, they should. Yeah, they should. They're taking care of themselves.
Okay.
But yeah, it
Thanks.
sounds like, yeah, they're taking care of themselves.
Okay. Thank you.
Hmm.
Thanks for that question, Mickey. Great question, because that is definitely many people's circumstance. So does this I think you were talking about the next question is, does this include if you have income from college? So Angelique, if you're still on, you mean student loan
Yeah,
income or like financial aid?
Like both. So I get like I think it's subsidized back or they told me some I remember back in the day where they were saying that if I go to school that it would make me not have to pay as much. So if I could go through and modify that because I just started school mid quarter. So I didn't know. I know she said online for B that that would be something I would enter, but I'm not sure because you said enter it annually, so I don't know
yeah, whatever the
what I would
annual
be
amount
entering
is.
then.
Yeah, whatever the annual amount is. But wait, okay. So
Mhm.
you know what? That one, let me take it. Send me that question because I don't want to answer it incorrectly. I want to make sure that I get all of your information, and I will get back to you. I just want to make sure. If I'm not sure, I'm not gonna tell you.
Angelique, send it to
Okay.
me, email it
Yeah.
to me and I'll get it to her. Basically, the student loan interest is the amount that you put on 4B. So if you have
Yes,
an
the
unsubsidized
interest.
loan, that is the loan that's going to accumulate interest while
Yeah,
you're,
the interest you pay will go on there.
yeah.
And that's like a deduction because that's interest you're paying on something. So that would be like a deduction.
Okay. Thank you.
Great
You're welcome.
question. Awesome. I'm trying to see if we have any more questions. I don't see anybody have any questions that didn't put in the chat. You want to raise your hand and ask it. You could come off mute. Okay, I don't see any hands.
I have
Okay.
a follow-up question, Mia. I know she said she would parking lot it. This is Angelique again, because I also had went from part-time to full-time. But you know what? I'll include it in the email.
Okay. Excellent. Excellent.
You working part-time and full-time?
Angelique, part-time and full.
No, ma'am. I've worked full-time and I was going
Oh,
to school full-time and now I'm going to school full-time and working full-time.
Mm.
okay.
Yeah, that's a major change because you change.
Mm-hmm.
Yep, absolutely. So yeah, you
Oh,
definitely.
and you can change your W-4 anytime. It's not a like set amount. You can change it one time a year. And I would like to mention one more thing too, because a lot of people, some people, they will put exempt. You can put exempt on a W-4 from paying withholding tax. However, you can get in a lot of trouble with doing that, but you can do it.
Awesome. Well, thank you so much again. Um, Awesome job. I'm very, very proud of you. And before we go, for those of you who have never been to one of our events, I just want to share some of the other services that we provide in on our team. So if someone invited you here tonight and you did not know that we offer all of these services, we just wanted to make you aware of this, that we offer cash flow management support, debt elimination, if you need some help setting up a high yield savings account so you can actually earn money on your money that you're saving, insurance, retirement, estate planning, or even if you want to start your own business. So definitely reach out to the person who invited you here tonight if you haven't already, and we would love to be able to support you in that. So again, thank you so much, Mom, for coming on and sharing this valuable information. We appreciate you. And for those of you who are still
Thank
on,
you.
if you don't mind,